Hey guys, what's up? Welcome to another episode with me, Shashank Gadupa. And in today's episode, it's time to understand what is Parag Parikh Mutual Fund buying in this beautiful dip, and have they actually bought anything? How much cash do they have? So without wasting any one of your time, let's quickly jump into this beautiful learning video. Now, first things first, as you can see in the screen, I have made an Excel sheet February to March. A lot of people ask the question, Shashank, how do you find this data? The source is on PPFAS's website. There is something called fact sheet, and every year they are supposed to give their fact sheet out. Okay, so every month, sorry, not every year. So every month they have to give their fact sheet out, and basically I track them very closely. Now, again, this is again, I'm a SEBI registered research analyst, so let me be very open with my disclaimers. This is not a paid podcast video. This is not a paid sponsored video. This is absolutely from a learning perspective. So please just take everything from a learning perspective. Okay. So if you look at PPFAS, I think this year they have been actually doing well. They're actually up 7.76% from the last 1 year. And as you guys know, market has been very bad in this last 1 year, right? And the beauty of Parag Parikh is they basically play it safe. That is what we have seen predominantly. They basically like playing it as safe as possible. They are not very aggressive risk takers, right? If you want to look at their position holdings right now, as of now, they have 19% even now in cash. 19% of their entire AUM is basically cash. Now, cash doesn't mean it is just sitting in the bank account. Please understand, they deploy it into debt and other instruments. So they still make 7 to 8% from that cash. So a lot of people think that Parag Parikh is sitting with 22,000 crores of cash. What are they doing? Why are they not deploying? Boss, it is making money. It is in fact made more money because it is your FD type of concept, right? Than in this last 1 year. They have deployed in financials and technology, which is correct. Why a lot of people ask this question that whenever a mutual fund comes, why do they go and buy SBI Bank? Why do they go buy HDFC Bank, ICICI Bank? Why do they go buy Reliance? Because please understand, your Nifty 50 is with these companies. If I am a fund and I don't put these companies in my basket, then me and Nifty 50 are two different players. Right. So because they are also competing with Nifty 50, almost 40 to 50% of their portfolio is usually in financials and technology, which is comprising of Nifty 50. Even if you look at Nifty 50, highest weightage is financial, second highest is technology. At least you're in the same path. Your picks can be different, but your path has to be the same. And then with small cap, they basically beat the index. That's how they do, right? So let's get into the video. So what have they done this time? They have started adding HDFC Bank a little bit more. Right. So usually they had not added HDFC Bank in the whole fall, but they have actually taken almost a very good allocation, almost 2,000 crores has been added in HDFC Bank. Now, HDFC Bank, I had said in my past videos, again, I don't hold it, but it has come to a point where it is very undervalued. But yes, the problems have not been solved. Hence, the valuation of the company is low. But right now, from a value investor perspective, it is very good. From a momentum, it is not very good. But from a value investor perspective, it is very interesting. So they have bought more of HDFC Bank and they've increased the weight. Almost 20% of increase in weight has happened. 20% increase has happened here. Power Grid, a slight increase. So Power Grid is very good because for two reasons. One, it's a long-term futuristic game. And second, the dividend of Power Grid is also quite high. So they have no problem with Power Grid as well. Same with Coal India. Power India and Coal India and Power India are both high dividend players. So they get a lot of dividends. Same with ITC Bank. And they've added a little bit more of ITC. Now, what have they started doing? And I want to show you this as value as well, right? Please note, this is not buy or sell. This is ICICI Bank. It has given 1% in the last 1 year. And you can see how it has actually gone down from its peak, right? 11% from its peak. Now, why I like looking at what mutual funds are buying is mainly for specific set of mutual funds. If I want to look at some good, interesting small cap companies, I will look at Bandhan and Nippon. What are they buying? If I want to look at deep value picks, I will understand what PPFAS or HDFC Flexi Cap is buying. Now, what is happening right now is the private sector banks have become very undervalued. Public sector banks are valued very well right now. They're all flying. SBI is flying, Bank of Baroda is flying, etc., etc. Everything is flying. But private sector, mainly your HDFC Bank, Axis Bank, ICICI Bank, they have gone to dogs, right? And you can see it here that they were compounders in the past, but now they have taken a big beating. But is it temporary? Answer is yes. It is not permanent. They will bounce back. They are private banks. But in a value perspective, from price to book angle and price to book perspective, they are now sitting at 2.68 price to book, which is ICICI Bank, one of the best, banks in private sector, is sitting at 2 point whatever price to book. Your biggest bank in India in private sector, 2.18 price to book. Your Axis, which is also very good, has also given, Axis has actually given 26% return, fell down a lot, which was a very good value steal, sitting at 1.99 price to book. So this is what I'm saying. So value investing has come back into private banks for people who are long-term investors, not short-term investors. Whatever problems they're facing is very small, they will figure it out. So So they have actually done that. They have increased stake in HDFC, ICICI, Kotak Mahindra Bank, and Axis Bank. They've not increased in Axis Bank, but they've added these banks very aggressively. Next, obviously, is IT. IT is something that they've added as well. HCL Technologies they've added, Mahindra and Mahindra they've added. So pretty much they've added all the good parts of the bigger index. Bajaj Holdings have not added because Bajaj Holdings has actually fallen down a lot. So they've not added anything. The weightage has gone down, but they've not added any more stocks. Bajaj Holding also gives a lot of dividend. Now HCL they've added, Infosys they've added, which is great. Last quarter they were adding REITs a lot. Both Embassy Office REITs, which gives around 5.4% dividend, and Brookfield India REIT also they added a lot. Brookfield actually is falling because they've recently done a very big acquisition. I forgot the name of the company. I think EcoWorld or something. They're doing a massive acquisition. But they're both projecting, Embassy and Brookfield are projecting that the DPU, which is distribution per unit, should go up by 7 to 10% every year, right? So it's a huge value buy, again, because here you get two things. In REITs, you get appreciation benefit and you get dividend benefit also, right? So both benefits are there, and both of them are heavily dependent on India and Indian real estate, commercial real estate, and again heavily dependent on Bangalore commercial real estate as well. So these two they have been buying a lot. TCS also they increased allocation. As you can see, it's increased a little bit. Again, value buy. Cipla they bought recently, little bit. Slight allocation increase in Cipla, not very big, but the major allocation was given to the top players over there. Brookfield is fine. CMS they've been adding again and again. So CMS, something's going on with CMS. They have been adding a lot. I don't want to go too deep into CMS. Let me show you this. So if you look at CMS, in the last 1 year, CMS has actually gone down 35%, right? It's in a very negative trend, but they've kept adding it. So CMS has two businesses. The main business is the cash collection business. Now, because of ATMs not doing so well, the cash collection business is not looking great. And I don't want to go too deep into it because my father's company was bought by CMS just this year. So I can't go too deep into it, but it is falling a lot. And even I don't know why it's falling, right? I asked my dad also, even he's like, "Meko bhi nahi pata kyun gir raha hai." So I don't know, but for some reason, Parag Parikh is adding it left, right, center, and that is something I'm definitely looking at. And they added a little bit of Intraprastha. They actually took, it's a small allocation from their overall weightage, but IGL and Mahanagar Gas, they have taken good amount of stake. Now, they're only 81% deployed. 19% of their money is still in debt and cash instruments, right? So they have not actually deployed yet. Even though we feel that the market is good, they have actually not deployed much. And this is the allocation matrix. What did PPFAS actually buy? These are all the stocks that they've increased allocation this year. From a weightage standpoint, the highest weightage was ITC. They have a very good weightage, Feb to March, both at 5% right now. And they increased, as I said, Kotak Mahindra Bank. So private banks, HDFC, Axis, Kotak, they have increased quite a bit. So that is a good sign. And REITs, they're constantly adding. What did they sell this time? They have sold Balkrishna Industries 22% down. They've reduced stake in Balkrishna Industries, but they've increased stake in all of these companies, right? So it is again very important for us to learn and understand, because I get a sense that okay, now these guys are buying these private banks, so there is value in private banks, and they're buying a lot of IT companies, which is again value. And if you are invested in Parag Parikh, you know that they play such games. They like playing games that are long term. They don't play momentum. They don't play aaj ka kal ka game. They rather play a long term perspective, and that is basically what we are looking at. So again, a very, very interesting company. So if you guys have looking at it, I'm going to do Bandhan as well. Let's check some small cap, because a lot of you guys told me, Shashank, let's do Bandhan. So I'm going to do a Bandhan as well. So let's see how that goes also. By the way, I don't know how many of you all are interested, but this weekend on April 18th, we are doing a deep dive hospital sector webinar for anyone who wants to learn about the Indian hospital sector, right? We will be covering the entire sector, understanding the macro and future drivers. We'll be also covering interesting company deep dives. For example, a small cap merger, demerger, special situations happening, a P-backed oncology turnaround, India's most capital efficient hospital chain, and a high margin niche play. And then we have some bonuses there as well. So if you are interested, I'm going to put the link of this in the comment below. You can join the webinar. We will be doing it on April 18th, and you will get the link for all of it. Awesome. Chalo, this is me, Shashank Gudova, signing off. Until the next video. Thank you. Take care. See you. Bye-bye.